This is the FCTO Daily Forex News Report for April the 5th, 2013. Yen's post-Bank of Japan meeting weakness remains the general theme for today as US dollar Japanese yen jumped to a 3.5-year high of 97.19 and took out the 96.70 resistance to resume the recent uptrend. Australian dollar Japanese yen also jumped sharply and broke the 100 psychological level to resume the larger uptrend. Solid strength is also seen in Euro Japanese yen and British pound Japanese yen, and they should take on recent resistance levels of 127.70 and 147.97 soon. Investor George Soros warned that if the Japanese realize that the yen's decline is liable to continue, they will want to move their money abroad, and this may become like an avalanche. Meanwhile, Bill Gross said that much more depreciation of the yen is needed in order to get even close to 2% inflation. A key factor to watch is whether today's non-farm payroll will trigger a steeper rally in US dollar Japanese yen, which would then bring other yen crosses higher as well. While the euro initially dipped against the dollar after the European Central Bank left rates unchanged at 0.5% yesterday, the common currency staged a quick and strong comeback and is trading back above the 1.29 level. It's believed the key factor in driving the euro higher was Draghi's strong emphasis on keeping the euro. ECB President Draghi said that some people have vastly underestimated what the euro means to the Europeans and vastly underestimated the amount of political capital that has been invested in the euro. He strongly stated that there is no plan B. Another factor was ECB Executive Board member Kore's comment that shared Eurozone debt is a good objective. Looking ahead, employment data from the US will be the main focus today. Economists are expecting a 190,000 growth in the non-farm payroll in March, with the unemployment rate unchanged at 7.7%. The ADP employment report released on Wednesday missed expectation and showed only a 158,000 growth. While the ISM manufacturing index also missed expectations, the employment component jumped sharply to 54.2 in March, the highest level since last June. However, the employment component of ISM services dropped sharply to 53.3, down from 57.2 in February, and hit the lowest level since November. It's hard to predict whether the figure today will give us a surprise, but overall we'd tend to go long US dollar Japanese yen if the non-farm payroll beats expectation today, and would avoid the dollar altogether should it miss. In other news, Canadian job data will also be a major focus. It's expected to rise 9,000 in March, while the unemployment rate is expected to be unchanged at 7%. Other data to be watched today includes Eurozone retail sales, Swiss Forex reserves, German factory orders, Canadian and US trade balances, and Canadian IV PMI. For all the Forex news affecting the market today, please join us at forexcurrencytradingonline.co.uk. That's forexcurrencytradingonline.co.uk.